Here's $, weekly time frame, and let's analyze our weekly price action by looking at this candle. So as you can see, $, was sold off drastically at the start of the week, but then once the price approached the key daily support level right here, along with the round number level 1.12, buyers had entered the market and pushed the price higher, as can be evidenced by this huge wick which is sticking out along the bottom. So from the price action standpoint, it tells that at this area we have a significant accumulation of buyers which created this huge wick along the bottom. However, at this point, it seems that price may continue to consolidate between these two effective levels, meaning between this weekly effective resistance and daily effective support right here. Even though we have this long wick candle, on the other hand, we also have 3 red candles in a row right here, and the price failed to break this weekly effective resistance, which is the major resistance factor on the price's way at the moment. So with that being said, at this point we establish an indecision bias, and let's move on to the daily time frame. If you want to enhance your trading experience, you need a high-quality algorithm that combines complex trading processes to tell you when to buy and when to sell. So if you want to access our own private indicator quant algo to get results fast, all links will be in the description and in the comment section below as well. Without this algo, will put you at a disadvantage. So here's $, daily time frame, and as you can see, we previously had multiple long wick rejection candles right here, which tell us about an obvious momentum loss and then pricing down. However, when it comes to the current situation, as you can see that the price is forming a double bottom pattern right here. So guys, it is also important to note that yesterday we released a new video about chart patterns, so make sure to check it out. So at this point, this double bottom pattern is unconfirmed, because first of all, as you can see, the price is well below the 50 EMA and also below the effective level right here. So at this point, we will wait for the confirmation of this double bottom pattern on the lower time frames. So with that being said, moving on to the forward time frame to discuss our entry ideas for next week more in depth. So here is $, forward time frame. And as you can see inside our global double bottom pattern on the daily time frame, we have another double bottom on the forward time frame right here. So it gives us some kind of an extra confirmation of a bias. So as for now, we have 2 opportunities to enter the trade long. First of all, let's discuss the idea which involves higher risk. Let's draw the structure right here, which was perfectly respected over the past week. Then we may draw a trend line somewhere right here as well. And as you can see, at this point we have some kind of an area of high confluence where the structure, the 50 EMA and the trend line, and also the round number level 1.13 all line up in one place. So at this point we want to see a clear break right above the high confluence area to enter the trade long. Our first target should be this weekly effective level, because we don't know whether the price will break right through it and continue its bullish wave. Also, another way to enter the trade long is to wait for a breakout right through this weekly level, which is more conservative idea. So at this point our trigger event will be the breakout of this weekly level, and then we should wait for some kind of a pullback, some kind of a retest to this broken level somewhere right here, allowing us to draw the trend line along the top, and we should enter the trade long on the breakout of this correctional trend line right here. So guys, here's our views on the $. Press the like button if you like it, and with that being said, let's move on to the pound-dollar. So here's pound-dollar weekly time frame, and as you can see, pound-dollar was sold off drastically within the week, as can be evidenced by this enormous engulfing candle right here. So at this point, as you can see, the price easily broke right through the 50 EMA on the weekly time frame and also right through this weekly level right here. It also showed us an initial reaction right to this weekly level right here in face of this long wick which is sticking out along the bottom. However, even with this wick in mind, we have a higher probability for a bearish wave to continue at this point, right, to test this monthly effective area right here. So at this point, let's go down to the daily time frame to see a more detailed picture. So here's pound-dollar daily time frame, and maybe some of you think that this situation is quite similar to $. Case as well, but it actually doesn't. So as you can see, we had a clear double top pattern right here, and then the price turning down drastically, breaking right through the neckline along with the 50 EMA on the daily time frame, and also breaking right through this weekly level right here as well. So it is also important to note that this breakout setup was backed by a bearish momentum gain, as can be evidenced by these candles right here. So at this point we have a significantly higher chances for the trend continuation move to the downside. So with that being said, let's move on to the forward time frame and discuss our ideas for next week on this pair. Here's pound dollar forward time frame, and as you can see, the price is presently in a drastic downtrend. The first important thing that should be noted is that the price presently far from the area of value, so that's why we expect our price to pull back somewhere to this weekly level right here, where we have our weekly level and the 50 EMA on the forward time frame as well. At this point, we should drop this correctional trend line by connecting the swings along the bottom, somewhere right here, and our bearish bias will be activated after the breakout of the given trend line, allowing us to enter the trade short and initially target this weekly level right here with a follow-up target in face of this previous swing low somewhere right here. So guys, here's our views on pound dollar, and with that being said, moving on to the dollar CAD. Here is dollar CAD weekly time frame, and as you can see, last week the price tried to break right through this weekly effective level, but failed, creating this long wick which is sticking out along the top. So this means that the price may continue to consolidate in this tight range between two effective levels, right here and right here, which is why we establish an indecision bias on this pair on the weekly time frame. And with that being said, moving on to the forward time frame to discuss our ideas for next week. Here is dollar CAD forward time frame, and even though we have some kind of a momentum gain right here, short ideas don't make sense at this point because the price is currently close to this daily effective support level right here, where we also have the 50 EMA which floating on the weekly time frame as well. So with that being said, we have a significant support cluster along the bottom, and as a result, short trades should be avoided for now, but instead we will start looking for potential short trades only after the price will show for us a clear breakout right through that level with a follow-up pullback or to this broken level or to the Fibonacci golden zone, or maybe to some lower time frame structures such as on the 1 hour time frame or even on the 50-minute time frame as well. However, our entry plan remains unchanged. So first of all, we should wait for a clear break below the support structure with a follow-up pullback closer to the area of value, and then we should draw a trend line to confirm that this pullback is true. We should enter the trade short once the price will break this correctional trend line somewhere right here. Here's our views on dollar CAD, and with that being said, let's move on to the gold. So here's gold weekly time frame, and as you can see, the price showed us an initial reaction to this monthly level which we discussed and which we expected in our past video. So at this point, as you can see, we have some kind of a momentum loss through the shrinking candles, and also this insanely long wick candle implies for us some kind of a bearish bias for next week as well, because as you can see, this candle rejects the monthly effective resistance right here and also another weekly effective resistance right here as well. So at this point we received a confirmation about a huge bearish presence in this area between two effective levels. They may push the price lower right to its previous support structure somewhere right here. However, all that should be confirmed on the lower time frames, which is why let's move down to the daily time frame to look at the price action more in depth. So here is the gold daily time frame, and as you can see, we have a picture perfect reversal structure along the top right here, because as you can see, the price showed us multiple rejections of this area with a follow-up long weak rejection which hit all sellers stop loss, and also was followed by this momentum candle right here, making a lower low and confirming some kind of a bearish bias at this point. So with this in mind, let's move on to the forward time frame to discuss our trade ideas for next week. So here is gold forward time frame, and as you can see, we have an obvious bearish bias right here because the price is making lower highs and lower lows, of course confirming the downtrend conditions. More importantly, these lower swings are forming with a clear momentum gain, as can be evidenced by these big candles right here and right here. Let's draw the support structure right here, which will act for us as a trigger event for the trade entry short. So at this point, we will wait for the clear momentum breakout of the given structure to enter the trade short. Our first target will be the structure established on the weekly time frame, which represents the previous major swing high. Our next target will be this weekly trend line right here. So guys, here's our views on gold. Press the like button if you like the analysis. Also leave your thoughts in the comment section below. And with that being said, moving on to the US oil. So here is US oil weekly time frame, and it is important to note that the price has made exactly what we discussed in our past video, and as you can see, the price hit our target in face of the 100 price level. However, at this point we have some early signs of a possible pullback because we can see a clear momentum loss, as can be evidenced by the shrinking candles right here and also by this very long wick candle right here as well. So at this point, to confirm our downtrend conditions, the price should make a new low by breaking this weekly support right here. But at this point, we establish an indecision bias, and with that being said, let's move on to the forward time frame to discuss our ideas more in depth. So here's US oil forward time frame, and next week we will look only for the short trades due to the reasons discussed on the weekly time frame. So with that being said, let's draw some kind of a support structure right here. So we got it. Also, we can draw the trend line by connecting the swings along the bottom as well. So got it. So at this point, to enter the trade short, we will wait for the breakout right through the trend line as well as through the support structure right here. Our first obvious target will be this weekly level. After the price hits this level, we will consider some stop loss trail to catch a bigger move. So guys, thanks for watching. Press the like button if you like the analysis, comment below what you think about this analysis, what pairs you track for the coming week. So again, press the like button, subscribe to our channel, and see you the next week.